Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Scott Redler on the line. He's Chief Strategist at T3 Live and T3 Trading Group. Scott, how was the weekend?
Weekend was great. Definitely, it's good that it's getting warmer out and getting closer to the summer, which always brings a smile to everyone's face.
Did you do any triathlons or any major sporting events over the weekend?
Not this weekend. Last weekend was the Spartan Beast, which was a lot of fun, but I did get my crew back in the trails on Sunday with our dogs just to get back out there because we have, we're going to do a try in July. We're going to do the marathon in November. So got a nice race season to keep us busy ahead of us. So we just have to do our maintenance workout. But after a big race, you want to try and let your muscles relax just a little bit.
Okay, S&P futures or S&P index up at new all-time highs here. Good earnings last week. Just give us your technical outlook here. We have the spider up. One thing I have a problem is when the market breaks out like this is finding targets on the upside. How do you do it?
Well, you use your pivots. You use prior day's highs to see continuation. You also look at levels that shouldn't break to stay with the move because last week, people on my VTF saw that I got long pretty much the spiders on that red dog reversal on 422. If you look at April 22nd, you'll see right around the 2094 pivot. You'll see that we went below the 421 low of 2094, reclaimed it and closed strong. So that was like another higher low of pretty much the past month. So on that one, I'm like, you know what? This time I'm going to stay along the spiders and try and stay along some of my favorite stocks. And if we break above the descending channel there, which we outlined, perhaps we could add, which was that 2109, which was like 211 on the spiders. I added there. You had a quick move, took some off, went and got comfortable, and now I'm still on the spiders. So what I do is usually, when you're up 50 cents, I'll sell half pre-market and then figure out what the composure is of the day, how we hold in there, if I could add it back for a stronger move. And, for something like today, when you're opening all-time highs, you want to see, does it extend above 2120 and hold above it and make it real easy, or, does it come back below and fill the gap and then, find the pivot low in the first 30 minutes to, put some of the trade you've sold pre-market into strength back on and stay with the trend. So if you sell some into strength, you have the luxury of finding a new pivot to buy it back, or you just stay with what you're comfortable with and make sure you're doing it for the right reasons, not just because of the money.
Yeah, good point there. I used to use the the average daily range too as a projection, especially like the SPOOs have made a low here at 21,050 that looks pretty safe for now. The 9-day average trading range is 21 and a quarter, so doesn't work out perfectly. But boy, if you add that might take us up to 2030 today. Of course, there will always be a lot of zig and zagging during the day as well. All eyes on Apple here. Been really quiet ahead of earnings. Kind of got a zip to the upside last week. A lot of things to keep an eye on. Even if they don't have great earnings, if they talk about an increased buyback, a lot of different factors there. How you playing Apple going into earnings?
Well, last week on the same day, the spiders kind of regrouped. So did Apple. You could use that same red dog reversal strategy when it went below 126.67 and back above it. That was on the 22nd. I got long it. Added when it went above that little trend line that I sent you, which was right around 128 for the first time. It broke above it and didn't fail. So I'm long coming in today, which I typically don't do. I don't like to be long things going into earnings day because so many institutions need to, square away positions. Some don't want to be long. Some don't want to be short. They add, but I was like, you know what? I'm in this from last week. I got great prices, and if Amazon can make new all-time highs and Netflix make new all-time highs, Google can go up on bad earnings, I'm going to stay in this at least for the overnight. So it being up $2 makes it very easy for me, to not be so stressed about taking into earnings. So what I've already done is, at this, what's up tomorrow? It's up $2 this morning. I think I just went in. I sold already half of what I have overnight. I'm going to try and trail half until 3:30ish, and then figure out what do I want to do into earnings, because you have a pivot here at 133 actually 60.
Yep.
That's the same pivot that just say you had a Netflix when it broke above 485 after the print and didn't look back. Same pivot Amazon had at 395 and a 408. So we'll see if there's a trade after the print, or sometimes Apple puts out all of its earnings and all of its stuff, so it gets halted. So it makes that a little bit more tricky if you go into the earnings without being long, because the last, I think, 2 or 3 reports, it's gapped up, and then, basically you had to be very patient to get more gains on top of that.
Do you, when you go home with positions like that, I mean, do you try and use the spiders at all, or maybe a little bit of a hedge with the spoos or something, or do you just kind of? I know Dennis likes to do that. Some other people like to put a little bit of hedges on. Do you do that at all, or are you pretty much just a one-directional trader?
No, I do that, but when we're breaking out, I don't like to, on the beginning part of a breakout, have hedges on,
Right.
because last year that got me so badly last year. I would go home with 6, 7 longs, and then I would hedge with the spiders or the Qs, and all of a sudden, we'd be up 8, 9 handles, and that my hedge would take away from 2 or 3 of my longs, and then 1 or 2 of my longs wouldn't do anything, and then all of a sudden I'd be flat on my overnights because I was too excessively hedged. So this year, I was like, you know what? I'm going to take what I like, and if I like a directional move, I'm going to go with it. So I kind of think that I thought to myself, the spiders can continue, we can continue this week. So I went pretty much directionally long into today. But if we happen to have been up 4 days or 5 days above a
There you
breakout,
go.
or the
Yep.
oscillator was plus 60, and we were so overbought, then I would definitely start to take hedges for some kind of pullback. But we're not overbought here, in my opinion. And I do think this could continue. So I kind of went out with 4 longs and some calls versus hedges, into today.
Okay. All right. Well, let's do a little revisionist history here, going back to Friday. Boy, they digested that move in Amazon, and it took off to the races, new all-time high. How do you play a stock like this the day after? Let's say you weren't anxious to rush out at the open on Friday if you were long like me, and you held on a little bit. Would you kind of use that low from Friday 439 kind of as like a like I'm going to try and stay in this thing? Because if you use that in Netflix from that day, you still be in the trade and have accumulated more profits. How do you look at Amazon today after the big move on Friday?
I think it's a great plan. You trade versus the earnings gap, and you see how many days it needs to digest, and then if it takes out the earnings day high, it continues. For me, I couldn't really trade Amazon because I went long the calls into earnings because I just wanted to be in it. And then after earnings, I actually shorted the stock a little bit early, like at 4:05, because my calls cost me $15. And if you remember with Amazon, I went up and then down, so I thought I was going to have a zero. So once I went to 4:15, I was just happy to lock in my premium versus my options, and then I kept half free. So right around on Friday, right like around I guess 9 o'clock, I shorted 440. So I locked in 50 points on the option. So I just stayed away from Amazon because I was pretty much collared with my weekly options. So I was like kind of in the Amazon penalty box. But coming into today, it sounded like a dollar. So my calls actually covered my Amazon short, so I could trade it today if I want to. I'm probably just going to let it sift out and see if it can hold 439. If it holds 439 for a few sessions, then you'll have a pivot to trade against. And then if it were to take out the earnings high, which is 452.65, perhaps you get a little momentum above. If you look at Netflix, gave you a tiny bit of follow through the day after earnings, but it also closed a little bit better the day of. And now it's been quiet. Netflix is a good example too, where you have a big earnings move, and then sometimes it takes 1, 2, 3, 4, 5 sessions to get some price discovery before you feel comfortable about holding a swing or looking for a trade. And for Netflix today, if it gets above 565, it got upgraded today. Perhaps it goes back to the pivot high of 576. But you want to see these big earnings gaps hold. You want to make sure they're not exhaustion gaps. And there's the second earnings report in a row that both of these had big earnings gap. I don't think this one's going to be as powerful as last quarter because it's from a higher price, but you could probably play it the same way.
How about LinkedIn here? If you go subscribing to the theory, gap and go after last earnings consolidation. What are you thinking of LinkedIn?
LinkedIn, it's a loose and wide type stock. This was a compelling name for me over a year ago, a year and a half ago. Now it's like I've tried to play it since earnings. It tends to be like a one-day wonder. It has a strong day and a weak day, choppy, choppy, choppy. And, if you look at what happened to Facebook, Facebook didn't do enough to take out the historic high. So for me, LinkedIn, I think, people are going to be waiting to see what happens as we move closer. I don't know exactly the day of earnings, but I guess maybe we could talk about Twitter, because Twitter is coming out on the 28th. And, I'm long some options from last week. I took them with Facebook just in case Facebook did go, and all of a sudden LinkedIn, and then all of a sudden Twitter started taking out 52 or 53, which it's not, because sentiment around, I guess, social is, a little bit more cautious, which I think is actually good. It's right now, Twitter could be a little bit out of play, and people could start saying it's going to be a short, and then all of a sudden it reports decent growth numbers and decent metrics and has a move. So the way I'm probably going to leave LinkedIn alone, but for Twitter, with earnings out tomorrow after the close, I might add a little bit to my $52 calls, because I think consensus might be getting a little negative on it, the way you saw the reaction to Facebook, but I don't think it's the same animal.
Okay, all right. Let's move on to some other issues here. I know you've been kind of lukewarm on Tesla here, but boy, sure knocking on the door of the 220 level here. Is going to trading range finally going to give way? We're going to move back up in Tesla.
I was lukewarm probably into, before April when you had the downtrend, and I think my water got a little bit hotter once you had that gap and go on 4-6, which was April 6th. If you look at that day, that broke that descending channel there, and then it was going sideways. And I think last week I posted a chart on Twitter saying if you get above 213, it's been digesting well, and it had a nice move. And now it's had 2 days off, so it's on my radar. If this thing can get above 221.88, I think there's another, $4 to $5 cash flow trade before earnings that could take it back towards the resistance area, which is somewhere between 226 and 230. I think it's acting well. It's on the right side of the descending channel. You can't fully trust it, but it's been definitely behaving better over the course of the last month, and my traders have definitely been focusing on it a lot more in the last few weeks because of that gap and go that changed the trend.
We had someone asked about Baidu earlier, and I know that they're coming out with a report here Wednesday night, kind of the Chinese hype in stocks. This one really didn't go parabolic like some of the other ones. What are you keeping an eye on in Baidu?
Yeah, you see a lower channel, right? It's been holding above 202 for a while. You have a nice little pivot area here. So, it could be today. They could do it beforehand, but I'm looking at 219, 220. If you get a close above that, you could see a little pre-earnings move. You start to see some pre-earnings move in these things, which is good because you could trade it prior to the event and not have event risk, because it's hard for traders to take event risk. So at this point, if earnings are on Wednesday, and it gets above Friday's high of 218-ish or 217.89, I think there's a trade into the 220s. And then obviously you have to wait to see what you want to do with the report, because Baidu tends to be a crazy one to be up or down 30 points, and Google, which was treated well because it hasn't done anything so long, Baidu, which is a little bit more, speculative. If it doesn't, actually, Baidu hasn't looked at that chart. It hasn't really done anything since last summer. Last summer it was right around the same spot, so it's consolidated for almost a year. So it's interesting. I think if you wanted to be in a strategy, maybe do some, if you want to be in it for the earnings, buy the 225 calls. Maybe do a call spread, but then it's the type of name that if it's really good, you don't want to totally hedge your gains, but maybe do like 220 or 225 calls, because it has been sitting here for quite some time.
Yeah, also since February. Look at that. Channelingstocks.com. Buy the 201s and sell the 219s. You would have been able to get that off a few times, but right in the middle. Good point on that. Facebook, strong report here. Didn't quite get the boost that you expect sometimes from a good report. Did you get a red dog reversal in that one off the report?
You did. Coming into the report, nobody knew if they were going to, it was going to be enough. Was a 2-cent beat enough for a stock that just doubled in the course of the last year, near historic highs? So I was a little skeptical, but I was going to let the action tell me. And you look at there are two pivots there. 84.74 was one of them, which was the high right before earnings, and then you had 86.07. So when it was trading earnings day, remember it was down like $2, went positive, squeezed people through that. So if you were long, it kind of gave you a way out. And then if you were looking for a short, once it went back below 84.74, you could have been short versus the high of 85.59. Because some of the bears are calling a double top there, so to speak, or or just got or just made adjustments around it, and then from there it's now at 2 down days. So to me, I haven't traded in the past 2 days because I figured there's other things going on. It's probably going to be a little out of play as the catalyst is behind us and earnings. So let this thing trickle down to the trend line, which is a little bit closer to 80. The 50-day I think is like 80, 88. So into this 80 area, it'll be interesting to see if it holds. And if you sold around that pivot or shorted around there, decent spot to probably cover. And then, you look back to way back when, if you remember that report that came out, what that ignited the stock. There's a trend line that it's been pretty much above, and that trend stands somewhere around 79. So if it gets close to 79, it's going to want to hold there, and that's where I think institutions might come and buy it. And again, they sold it into that strength, or you reduced there. That'll be, I think, a spot. I don't know if it's today or tomorrow, but at some point, I think that's a spot that you look for some kind of signal, maybe a red door reversal the other way to buy versus low, and then see if it builds off that.
All right, macros here. Fed meeting on Wednesday. Sometimes, you financials get a little bit of a reaction, during the preceding the announcement and afterwards. First, what are your expectations for the Fed this week? And also, let's take a look at a couple of the financials, maybe starting with Goldman Sachs trying to break above 200.
I don't think this is going to be such a in-focus Fed report just because they're not like, having a communique and all those things that they do when they're changing something. So I do think the financials are trying to act better. Goldman Sachs did a pre-earnings run, so it's been digesting since. I would say, for it to stay in the game, you'd want to see Goldman Sachs, stay above 195, 196, and for it to get any kind of momentum, it's got to get back above 200. I think I'm going to kind of, if I do something with the financials, probably be trying J.P. Morgan. J.P. Morgan, everyone after the earnings report started calling it, the financial to marry, the leader, and it's done nothing since that report. So maybe you'd be a buyer of J.P. verse 62, which is or the pivot low from last week. So, if it holds 62 and then wants to make a new high at some point, going into the summer at 64.48, you get a middle, and then Morgan has a nice little flag type pattern above, I'd say it's listed above that 36.5. And if this were to clear 37.60, there's really nothing in its way back to highs. So I have a feeling, maybe buy a little JP Morgan versus that support. And if Goldman starts to go, maybe don't go with Goldman, go with Morgan because it's a little easier to grab and hold.
Yeah, that Morgan, boy, that's sure developing some nice resistance there. It bumped its head up above 37 a couple times here. It might have been on earnings. Look at that, almost a perfect triple top there, 37.56, and then you hit 37.45. So firm resistance there. See if we can break out to the $38 level. We've been on the line with Scott Redler, Chief Strategist at T3 Live and T3 Trading Group. He joins us every Monday for his technical and macro outlook on the markets. Really, really appreciate it, Scott. We'll talk to you again next week.
All right. Thanks for having me. Good luck today.